Good afternoon, everybody. This is Chrisi from Solstice ATR and Balkan Capital Research. I hope everybody's doing well on a Saturday. And since we are still on lockup due to the coronavirus, hope everything will work out, that they'll find a cure, and things will end up turning to be great. I have put in on a daily chart the Fortune 500, the NASDAQ, the Russell, and the Dow Jones Industrial average as the four indicators for most of the United States trend. We were in an up channel, linear regression channel. We had a sharper channel that we fell down from. If I take the distance from here down to here, I have 100%. My midpoint, we are above the 50% Fibonacci. We're trying to get to the 61. What I'll do, I'll show you how it would look like. I'll get this marker right here. I'll mark it. I stroll down to here, and you can see my 61 is sitting around the 38,101. So let me just remove that and talk about it a little bit more in detail. So what I wanted you to everybody to understand that we created a consolidation in this area. We are above the 50 simple moving average. We're trying to break out. I'm thinking if we break out the 37, 100, 250 area, which is this prior channel that we fell down from, we can continue higher back to the 200 SMA and fill that partial gap. We had an H pattern down, 50% retrace, came back down, and we couldn't get above this area. We consolidated for 2 days and eventually fell down all the way down here, and we continued back up. And everybody, in the last 3 weeks, hey, the market's going lower, the market is going lower. What they didn't expect in the last 3 videos, I said what they don't expect is that we can get a change in trend automatically. Trade what you see, not what you think. And most of them were expecting to go lower. Even on that last leg down, what did we do? We came back, retraced in those 4 days back up, and we are above the 50 simple moving average. And if I connect this dot with this dot, we are in an up sharp cone, which I will show you how. I'll put the marker there. We'll use a channel. We're going to grab this low here. We connect it to this area here. And it kind of gives us at least an anchor for next week if we fall through this area or we continue higher to clear the price. Oops, come on. Okay, there we go. To continue to clear to this area. If we fall through this consolidation, then things would change. But I think the momentum is still bullish to the upside. Let's go now. Take a look at the small cap / RTY. Small cap is basically the little bit the lagger. As we can see, we can take a look at the high here all the way down. I have it marked. We have not cleared the 50 simple moving out, but we are in a straight linear regression. I'm going to take this channel out because I have the computer grabbing the cone, remove drawing. So we're going to remove that one. And we can see that we are still in an uptrend. We're halfway through that regression channel. We cleared that first channel. Now we're clearing this channel to the upside. If I connect this one and this one, we have more than 3 dots. We are continuing higher. If this is going to create a rounded bob, clear that prior high, we can continue to the 50 simple moving average, 50 Fibonacci, and come back eventually to 2/3 of the move of between the 61 and 50 Fib. So that's the small cap, the canary in the coal mine. Let's take a look at the Dow Jones Industrial Average. This is the YM. And we can as well. We are in the same similar situation. We cleared the prior high and we continued higher, and the Dow is in consolidation, looking to clear the 50 simple moving average as well as the 50 SMA. Keep an eye on the Dow to clear this area in order to continue and clear the prior H pattern that we fell down from to continue higher back to this area here. And you can see that I have a cone here drawn. So what I'm going to do, remove this one out of the way. And what I'm going to do is connect those 2 dots at the bottom. So we connect this area here. We connect it to this one here. And we have in an up channel, as long as we do not fall through this channel in the 18 simple moving average, we clear the 50 to continue higher, that would be great. So let's take a look at now the NASDAQ / NQ. mind-boggling everybody in the industry, because due to the tech, such as Amazon, Apple, Google, Netflix, Tesla, the Facebooks of the worlds. If you notice, we had this prior up channel. We broke through those two. I'm going to remove this one, no longer valid. Okay, so everybody can see it. I'm going to remove that drawing. And we broke through the second channel, so we're going to remove that. If you notice, I'll keep that there because this is linear symmetrical to this one. But if you notice, when we came back up 2 weeks ago, we cleared the 50 simple moving average, the 50 Fibonacci, we cleared the 50 SMA, we cleared the 18 way down here, and we eventually got to the 61. The last 2 weeks we are in a diamond shape. This is a square. If we break out of the symmetrical triangle, I can do a channel here. I should fix this one a little bit more sharper so you guys can see it. We're going to remove this drawing. I'm going to make this a little sharper. Going to grab this here. Let me see. Grab that one here. Come on, come on. There we go. I'm just going to make it a little bit more sharper that way for the last candle. If we can continue high and we clear this area and that consolidation from the prior H pattern, we had a down move, we traced to 50%, fell all the way down, we cleared the 50, we consolidated at the 61.8 last week, we fell back into it, we cleared, and we trying to retrace back to create like a head and shoulder. This is the pattern. If this is the shoulder of it and it's going to continue, it goes up. If it's going to fall back through, keep an eye on it. This wedge is no longer valid because we fell through it. Remove drawing. So you can see we are in a linear regression channel above the 61.8, above the 15, above the 116 SMA. My line in the sand here is the simple moving average 116. A lot of people use a 200 SMA, use a 100, and they use a 20. I am using here an 18, a 50, a 116, and a 200 is basically hugging the upper channel. There it is right here. That's that white one. And everything is crossing to the upside. We are above the 200 SMA. Now we are clearing the 116 SMA. As long as I am above this channel, I'm going to be bullish. And I can continue to break this one. We're going up here to fill the gap. And this was the prior where we lost it when we came back down. So this is the NASDAQ for you guys. Let's take a look at the S&P 500. Remember, trading, we're going to trade what we see, and we have a lot of earning coming up. Such as Netflix reported it stayed neutral, it never fell down, which is a good sign. I mean, on the S&P, I do have a lot of, these are the gaps that we have. I did this drawing prior last couple of weeks ago. I did those two oval, and I said as long as we don't fall, I had an oval down here and I had an oval here on consolidating in those candles. I said either if from here, if we fall down, we break, come back to that bottom of this triangle. If we hold this triangle, we clear and we can go back to the upper channel, correct? So we cleared this channel, which is very clean. We can keep those two channels and that one to the upside. As long as I am in that wedge trying to climb and I'm above the 2785, 2768, and 2772, I'm going to stay bullish because this has been a lot of consolidation for the last 2 weeks here. And the prior, 3 days before we did that H pattern, eventually fell down to here. We retraced and continued higher. So this oval is no longer valid. This oval is no longer valid. We're going to take him out. Remove drawing. And I'm going to remove this drawing. What's the oval? So remember, we have a linear regression channel that we fell under. We coming back in it, and I put this channel here and I put this channel to keep us intact. If this channel breaks, we go down here in the 18 SMA. If this channel holds and we break up, we go out to the upside of this channel here. If I do another one, I can take this area here, connect it to this one. You see it up here? If you notice, this is a more steeper and sharper channel than the one before. So what I want you to understand, I'm trying just to show you how to look at linear channels, support and resistance in this consolidation. And if I remove the fib from here, it'll show you a little bit more. So what I'm going to do is show you the flag and the pattern that's forming here, and everybody thinking this was supposed to come down, fall through here, and eventually come back down. Unfortunately, I had this oval here. Remember, we had that white one here. We had one here. So it's, and I have one mark that was lower. I'll show you guys. I left it there, and I took that yellow one last week from there. See, I left the white one, took the white one, and this was the yellow one, which is symmetrical to this one. So this is no longer valid. We're not coming back here for a while. Okay, so we're going to remove it unless the trend changes. We're going to go back to an order, and I'm going to show you this on a 4-hour and make you understand the volume profile and the 15-minute. So we are above the 50 Fibonacci. We are above the 50 simple moving average. As long as I'm not below 2772 and 2747, 2768, stay bullish, because the 50 Fibonacci is 2785.75, and I think they're looking for this oval to come back to here where we fell down from the prior channel in the 61.8. This will be partial gap here. There's another gap here which I have, and there's these two gaps. I don't want to take them off because these are in the overnight, and I marked this area way back long time ago on the channels when we're trying to go back, and I kept this here on purpose. Okay, so let's look at the 4-hour. Here, the mouse is acting up a little bit. I'm going to zoom down a little bit. If you notice, this is the up move, and I consider this, that zigzag pattern. Everybody was looking to go down here and continue. Look what it has done. It's trying to break out of this channel to come back to the prior major channel that we fell down through time, and we spent it. If we can clear this, we continue higher. So look at this pattern as a flag. If it fails, look for the backside in the 116 SMA, which is on the 4-hour chart. Let's go now to it's a style. I'm going to go to the monkey bars to show you what to do. Where it says, standard monkey bars. I'll explain the monkey bars a little bit easier for you guys to understand. If I consider this is the high of the candle, which was, that day, 2808, and the low of it is 2717 quarter. You can see it up here on the volume profile. So this is the value high. I mean, not the value high, the candle high and the candle low. Value area low, value area high is that shadow. The POC is that purple area. As long as we are inside value, we are consolidating, trying to find the POC price where most of the time was spent. So if we, and this is, the time spent here, and this is the shadow between the lows and highs. So my puck from 3 days ago was up here. On Thursday, the puck was here. It shifted. The time was most spent because of, the liquidation break. And this is what most people didn't get to understand. They heard about GILD, that the vaccine wasn't working correctly, so they had a liquidation break. And where did they stop the liquidation break? Look at the bottom in the over 27.72.75, and we closed at 27.81.75, just slightly below the 50 simple. The 50 Fibonacci, the 28.85. By people getting short in the hole, basically what that liquidation break got rid of most of the shorts to strengthen the bulls in order to continue higher. That liquidation break gave the bulls the ability to continue higher, and we closed right at the 81 that day. And eventually on Friday, we gap up, we come back, retest the same area. If you notice, the low was in overnight 27.55 quarter. The high was 28.35.50. The close was 28.28, and the open was 27.77. We were slightly below this area here when we opened. We fell down a little bit, then we continued grinding back and forth, and eventually once we cleared the 85, the 92, and the 2800, we continued higher to close at the 28, and this is the value area high, value area low, and the POC. We use the value area high and low when we're coming from the low into the value area. It's going to be considered If we close the candle inside, it's going to continue to the prior puck, where the developing puck, where the puck was. Then if we clear the puck, we look for the value area high. What did they do on Friday? All the bears were short from the prior day, and that liquidation break strengthened the market, and that market gave us the ability to continue higher, and the bears getting out of the market at market price instead of getting out on limits and stops. They really didn't have any stops because they're thinking, hey, everything is bad, we're going to take it lower. What did they do? They drag it higher and eventually close up here. We pushed into the market, then eventually close up in this area. Did we build value? Of course. Is this considered a small pot? Yes. Is this considered a pot? Yes. So we have two distributions on Friday inside the range of the prior 3 days. As long as we are above this area and the smaller fib here, 2762 and 2785 and 2747, I'm not going to be bearish. This is my thinking. This is what I believe in. It's up to you guys what you do in the market. Trade what you see, not what you think. So let's go back now from this standard. Go back to standard candles. And what I'd like to do is give you a couple of ideas. Go on the 4 hour. Go on a daily. I'm going to show you a couple of the things, and we'll call it a day, okay? Remember, oil prices was very volatile last week, and a lot of the people got hurt in it. This is Apple. Is a net consolidation too, and it's going to be reporting soon, so keep an eye on Apple. And you can see it's in that symmetrical triangle. I'm not going to do much. Let's take a look at the BABA. That's BABA creating a head and shoulder. Let's take a look at Amazon, AMZN. You can see it in that consolidation too, flagging up here. Let's take a look at Facebook. Facebook did a U-turn before the earning report, and you can see that breakout out of this channel. We had this first channel here, that sharp one. Then we had the second one here. We consolidated and we broke out very nicely to the upside. This is no longer valid. We got to take this one out of the way. Remove drawing. We'll keep these two LCR channel. If you clear the 200, 116, look for the backside of this major consolidation, and these always can see them here. That's an advanced decline line, ADX, where we fell down. And I had these two linear regressions. We did two down here, and we are still continuing in an up channel. Let's take a look at GOOGL. You see GOOGL is in the same consolidation. You're at the prior breakdown from here. If you can see the pattern, this is the H. Fell down, came back up. We're in consolidation. If this is a rounded bottom and this consolidates, creates a shoulder and continue higher, we can come back to the prior breakdown of this channel in this consolidation here, and the earnings is around the corner as well. That's Google. Let's take a look at Netflix, which reported. I'll show you how Netflix looks like. Netflix, if you notice, this is the earning report. We pushed higher, we came back down, and we consolidated inside. As long as we don't lose the 400 area, 410, Netflix is still good to continue higher. And you can see this up channel. What I'm going to do is remove this channel and connect it a little bit more cleaner. Remove this drawing. I'm going to grab this one here to this one here. I don't have it. Okay, let's just go back. Sorry, guys. There's a channel. Connect it here. Connect it to this one. Oops. I did it again. The computer. Okay, connect here to here. As long as we're holding this channel, we're going to continue higher. If it falls, then we know it's on the other side. That's Netflix. Let's take a look at Tesla. And I'll show you Boeing, guys, so you can get a better idea. If you notice, Tesla consolidated up in this area. I don't like this island in there. Usually when there's islands in Tesla, usually I see those gaps usually fill on either side. If the momentum is still strong and Tesla's going to be reporting things are going to be great in the future on it, it's going to continue higher. If it's going to fall, look for the backside of this channel and the 50 fib on the earning report. And let's take a look at BA. A lot of everybody's, if Boeing gets back online, the airlines get back online. Planes need to be fixed, need to be serviced and stuff. So what I'm going to do is connect this channel here to this candle here. And if we break through this channel, This is the prior channel that we had here, which is the linear regression. We're going to remove it. I'm going to connect it to the bottom one, guys. So I'm going to get that candle here and connect it to this one. If it's going to fall, fill the gap. If it holds and breaks this one, look for the upside of the 38.25. So hope everybody enjoyed this video. Ask us how we can help you at Solstice ATR or Vulcan Capital. We are on Discord as well as YouTube and Twitter. You can check my handle, which is Chrisi Farah on Twitter, and ask us how we can help. Enjoy your week. Be safe. Look forward to seeing you Monday on Discord. Over